OG John AG here. Tonight we need to talk about one of the most important moves in the silver market so far this year, and almost nobody is breaking it down properly. A low-profile Chinese billionaire who quietly made almost $3 billion riding the gold bull market has just flipped the script and placed one of the largest silver short bets in Shanghai Futures Exchange history. His name is Bian Sheming, and his current position is now worth close to $300 million, tied to roughly 450 tons of silver, around 30,000 futures contracts. At the same time, silver recently sank to a 6-week low on February 5th, before bouncing back to about $81.52 per ounce, still roughly 43% below the historic high of $116.85 we saw at the end of January. So the question we're going to unpack in detail is this: is this billionaire making one of the smartest contrarian calls of the cycle? Or is he standing directly in front of a structural freight train in silver that will eventually roll right over his short? We're going to go through who he is, what he's doing, how he did it in gold, how he flipped to silver, what the article reveals, and what this means for you, whether you're stacking physical or trading leveraged paper. Before we dive in, quick reminder so you don't get scammed. I don't sell courses, I don't sell signals, I don't run VIP mentorship groups, I don't DM you on WhatsApp or Telegram. If anyone reaches out pretending to be me and tries to sell you something, they are lying. Block them. I am only on YouTube, and the handle is the same everywhere. John AG here. That's how you know it's really me. If this kind of breakdown helps you see clearly through the nonsense, drop OG John AG in the comments so I know you're part of the real community. All right. Let's start with who we're actually talking about. Segment 1, who is Bian Ximing? According to the report, Bian Ximing is part of a very small, very elite group of commodity traders in China who actually have the size and conviction to move markets. He's not a social media trading guru. He's not an influencer. He's one of those people who prefer to stay in the shadows while moving very large positions. He built his reputation on the gold side first. Starting around 2022, he went aggressively long gold on the Shanghai Futures Exchange and, according to the article, reportedly made close to $3 billion from that bullish wave. That's not, I got lucky on a few trades. That's a full-scale, multi-year macro bet that he rode from early to mature stages of the cycle. The article notes that he spends much of his time in Gibraltar, keeps a low public profile, but has still developed a loyal online following around his trading philosophy. That combination, low public exposure, high market impact, tells you a lot. This is someone who understands both the macro story and the microstructure of futures markets. In other words, this is not a random guy guessing tops. This is someone who made a career-defining fortune correctly reading the gold market and then decided to pivot into silver. Segment 2, how he played gold, then silver. After the big win in gold, Bian didn't retire and vanish. He did what a lot of successful traders do. He started looking for the next major inefficiency or overextended narrative. According to the article, he moved into silver more actively around August last year. But here's the important detail most people gloss over. He didn't immediately come in as a hardcore silver bear. He initially participated in the upside. The report says he built a long silver position and rode part of the rally up, capturing more than 1.3 billion yuan in profit as silver surged. So at first, he was actually on the same side as the bulls. He wasn't trying to fight the trend from day one. He let the trend do what it does best, run, and he took money out of that move. But by November, that started to change. Instead of just compounding long positions, he began to pivot. He started shifting his stance from bull to bear, reducing longs, adding shorts, repositioning himself for what he believed would be a turning point. That pivot wasn't perfectly timed. The article is honest about that. He took some hits as silver kept pushing higher into late January. He was early on parts of the short idea, and in trading, being early often looks a lot like being wrong, until it suddenly doesn't. Then we got the volatility explosion. Silver spiked to about $116.85 per ounce and then unwound brutally, dropping over 40% from that high before finding a temporary low. That's where his short book clicked. The article estimates his total profit from the silver strategy, after subtracting earlier losses, at about 1 billion yuan, with recent moves adding around 2 billion yuan in gains, roughly $288 million, and his net short position now worth close to $300 million. So he went long gold, made billions. Long silver, made over 1.3 billion yuan, then flipped to short silver, rode the crash, and is currently sitting on big paper profits. That's the sequence. Segment 3, what the article says about the silver market. Now, set the personality aside and focus on what the market is doing. Silver's behavior in this period is violent. The article notes that silver hit a 6-week low on February 5th, then rebounded to around $81.52, still roughly 43% below the late January peak. That's not a gentle correction. That's a repricing event. But here's the key line from the article. These price swings are increasingly being seen as industry and speculation driven, not purely the result of underlying fundamentals like mine output or industrial demand. That matters. When price action is being driven by positioning, leverage, hedging, and speculation, you can get overshoots on the way up, collapse on the way down, and a ton of forced liquidations in between. That is exactly the environment where a trader like Bian believes he can position himself against crowded emotional flows and let other people's leverage work in his favor. The article also points out that these violent moves are forcing many market participants to rethink their precious metal strategies as a whole. Not just, do I buy today or tomorrow, but is my entire approach to metals still valid in this new volatility regime? So the silver market right now is not calm, not balanced, not stable. It's a battlefield where long-term structural narratives, deficits, green demand, de-dollarization, collide with short-term speculative flows, leveraged longs and shorts trying to front-run each other. Bian has planted himself on one side of that battlefield. Segment 4. What his 300 millimeter short actually signals. Let's talk about what this $300 million silver short actually means. On a basic level, it's simple. He's betting on lower silver prices, or at least on significant instability and failed attempts to regain the highs. But the size and timing tell you more. Around 450 tons of silver exposure, roughly 30,000 futures contracts on the Shanghai Futures Exchange, built up more aggressively in the last week of January, right as prices were peaking. That is not a tiny hedge. That is a statement position. It tells you he believes the late January silver spike was overextended. Sentiment and positioning were too one-sided. The risk-reward for being long at those levels was terrible. A sharp mean reversion, or series of waves down, was likely. The fact that this has already paid him in the hundreds of millions does not automatically mean he's right long-term. What it means is, so far, his timing on the first leg down has been effective. It also tells you something broader. At least some top-tier capital is no longer comfortable with the idea that silver can melt up indefinitely without violent, punishing corrections. Segment 5. What this does not mean for you. Now, this part is important. A billionaire flipping from gold bull to silver bear does not mean your next move should be short silver now because he did. Here's why. His capital base is massive. His risk tolerance is completely different. He likely has hedges, cross positions, and credit lines you do not have. He can be early for weeks or months and still survive. You, with too much leverage and no plan, get wiped out in a single extreme candle. The fact that he's short tells you more about how the game is being played at the top than it tells you what trade you personally should be in. For long-term physical stackers, his trade doesn't change the underlying reality that silver has structural roles in industry. It's tied into the energy transition. It's part of many de-dollarization and wealth preservation strategies over the long term. For short-term leverage traders, his move is a warning sign. This is an environment where big players are actively hunting overextended positions and where being on the wrong side without a plan can destroy you quickly. Segment 6. Sentiment, speculation, and turning points. The article makes another subtle but important point. Silver's recent swings are forcing participants to reevaluate their strategies in precious metals. That's exactly what happens around turning points. The old playbook stops working. Buy every dip stops being a guarantee. Hold forever and ignore everything starts to feel uncomfortable even for strong believers. At the same time, people who missed the rally feel FOMO. People who rode the rally feel invincible. People who got in late on leverage feel pain. Bian's shift from long to short is a perfect example of how smart money behaves differently from emotional money. He rode the upside. He didn't call the top all the way up. But once he believed the narrative and positioning were stretched, he changed sides, even if that meant taking some short-term hits to get into the trade he wanted. That's not about ego. That's about risk management and adaptation. Segment 7. What kind of market is this now? So what kind of market are we actually in? Based on the article and the behavior we're seeing, silver right now is highly volatile. Big moves up and down in short periods. Speculation heavy, industry players and traders actively pushing price, not just fundamentals drifting. Positioning sensitive, margin levels, leverage, and stop placements matter as much as value. That's what I call a trader's market, not a tourist's market. If you're here with no plan, no risk limits, and no understanding of how futures and leverage work, you're stepping into a game where people like Bian Sheming are on the other side of your trade. If you're here as a long-term physical holder, what's happening now is mostly about entry zones, not about whether silver goes to zero or infinity. Price volatility can be used to your advantage if you're disciplined and not overextended. Segment 8. How to think about this as a trader versus stacker. So let's separate the two approaches. If you're a trader, you need clearly defined levels where you're in and out. You need position sizes that survive large intraday swings. You must accept that in a market where a billionaire is short 450 tons, your opinion does not move the needle. Your job is not to be right about silver forever. Your job is to survive, keep your capital, and participate when the odds are in your favor. If you're a long-term physical stacker, Bian short is mostly a lens on short-term dynamics. It tells you that the journey from undervaluation to fair value to overvaluation is never a straight line. It reminds you that even in structurally bullish stories, corrections and crashes are part of the landscape. Your job is not to predict the next week tick by tick. Your job is to know your time frame, your thesis, and your budget, and to avoid over-leveraging yourself based on short-term emotions. Segment 9. Why this story matters beyond one trade. Now, why did I spend this much time on one trader? Because stories like this are where macro narratives and micro positioning meet. On the macro side, we still have long-term concerns about currency debasement, growing interest in precious metals as part of reserve and wealth strategies, industrial trends that support silver demand over years, not days. On the micro side, we have exchanges where large players can push price around in the short term, leverage that can exaggerate every move, retail traders caught between narratives and volatility. Bian sits at the intersection of these two worlds. He made billions on the macro gold story and is now trying to capture micro dislocations and speculative excess in silver. That's why his move is worth paying attention to. Not to copy, but to understand what it says about where we are in the cycle. Segment 10, 3 key takeaways. Extended. So, where does this leave us? Let's break it down into 3 extended key takeaways, and then we're out. Number 1. Bian Ximing, a billionaire who reportedly made nearly $3 billion riding the gold bull market since around 2022, has flipped and built the largest net short silver position on the Shanghai Futures Exchange, estimated at about 450 tons or 30,000 contracts, with paper profits near $300 million so far. He's not a sideshow. He's a major signal that sophisticated capital believes the recent silver rally went too far, too fast, and is vulnerable to deeper corrections. Number 2. Silver's recent behavior has been brutal and revealing. A parabolic rise to roughly $116.85 per ounce at the end of January, followed by a collapse to a 6-week low by February 5th, and a partial rebound to the low 80s while still trading about 43% below the peak. The article explicitly frames this as a market increasingly distorted by industry positioning and speculation, not just clean fundamentals. This combination, violent swings plus speculative flows, is exactly the environment where margin calls, forced liquidations, and surprise short or long squeezes tend to emerge. Number 3. This is a trader's market, not a tourist's market. For long-term physical holders, these waves are part of the process. You focus on ounces, structure, and time horizon. For leveraged traders, this environment is unforgiving. You need clear levels, strong risk management, realistic position sizing, and the humility to recognize that you're operating in the same arena as billionaires with deep pockets and sophisticated strategies. Do your own due diligence. Understand the risks in front of you. If you are over-leveraged, this volatility doesn't care how bullish your long-term thesis is. It will still destroy your account in the short term. If you're building a thesis over years, not days, then use this story as context. Even the biggest winners in gold and silver change sides when the balance between fundamentals and speculation tilts too far. I'm OG John AG, and this is John AG here. If this breakdown helped you see the story behind the headline instead of just reacting emotionally to the price, hit subscribe, tap like, and drop OG John AG in the comments. And tell me this, is Bian Sheming early, perfectly timed, or setting himself up to be the next big short squeeze headline in silver history? Time will tell.